that you hold on to your revenue guidance. And as we speak, in fact, apart from Century Plyboards, we have the numbers of Nestle right at the bottom of your screen. Net profit coming in at 736 crores. Street expectations were close to around 760 odd crores as well. The revenue looks like a bit of a beat, 4830 crores. This compares the poll of 4460 crores. And the net profit also is actually a big beat. We were working with a number of 675 crores. The company has gone ahead and reported numbers of 736 crores. So from a top line and a bottom line standpoint, this has been a bit of a beat. I'm just trying to get some more details in. The EBITDA should come up for you this time around. You know, the worry was that increasing dairy prices could impact their margins this time around. Will that be the case or not? We'll just get the EBITDA in a bit. But from the two numbers that we have at the bottom of your screen, they look like a bit of a beat. 4830 crores on the top line compares with our polls of close to around 4600 crores, and the net profit also above our estimates by a good 10%. Plus.
Well, interesting, Mangalam. We'll wait back for the EBITDA number. Yeah, that's as well has come in much better. That's a beat of close to around 70 crores odd. And as Mangalam has been pointing out, for the last few quarters, the gross margins from around that 57% had come down to around 54% or thereabouts. But for the time being, at least, the EBITDA margin that we have got, well, that's better than what we were estimating at least. So let's see how this plays out. For the time being, the margin number is more or less in line. Or actually, in comparison to our poll, I think it's a little bit lower. That's the margin. But the absolute revenue is much better. The absolute EBITDA number as well is much better. And the top line beat has further percolated down to the PAT profit as well. Mangalam, anything more you're picking up?
Well, these numbers are extremely strong, Nigel, whichever way you cut it, because you have the revenue growth coming in at 21.3%. You know, most of the street were expecting around 12 to 13, 14% as well. But 21.2% domestic sales growth, 21.3%, total sales growth is a big positive. Over and above that, if you just take a look at, other prices, other products as well. The prepared dishes and cooking aids, which basically includes the Maggi's of the world, delivered strong growth across all products in its food portfolio. Growth momentum was also aided by market presence, media campaigns, and focused consumer activations. This was an important problem for Nestle this time around, because what had happened was the 5 rupee Maggi, they had increased the price from 5 rupees to 7 rupees, whereas Yippee kept its price at just 5 rupees. So the street was worried that Maggi may lose some sort of market share out there. But if this business has done strong growth, that means Maggi's held on to its brand and market share as well. Milk product, of course, was expected to register strong growth because of the milk prices inflation that we've seen. Confectionery did extremely well. The chocolate category is doing well. And Nescafe recorded its highest market share. So those are factors which are doing well as well. The management says they're witnessing early signs of softening in commodities such as edible oil, wheat and packaging material. However, cost of fresh milk, fuels and green coffee are expected to remain firm because of continued increase in demand and volatility.
Okay, all right, Mangalam, I'll give you some more time to ponder over those numbers for the time being. Let's get in Naveen Kulkarni of Axis Securities, who joins us on the phone line. Well, Naveen, good morning. Thanks so much for joining in. Mangalam says this number looks like a cracker. As yummy for you as well?
Yeah, could you just repeat the EBITDA margin number for me?
EBITDA margin is around 22.7%. That's flashing for us on the screen. The revenue number is around 4,830 crores. That compares with around 4,450 crores that we were working with. Absolute EBITDA number is around 1,098. That compares with what we were working with of around 1,030. And EBITDA margin, as per our calculation, is around 22.7%. Naveen, go ahead.
Yeah, so the EBITDA numbers are clearly a beat on our expectations. So I think those numbers are good. But the margin, I would say that still looks a tad below expectations. So we were looking at around 23.4% margin. I think the margin is slightly lower, but I would say that still the EBITDA numbers are slightly better than our expectations. So overall, it's looking good to me.
All right. Naveen, in light of the valuations at which Nestle trades at and the triggers that they have with regards to, expanding their distribution through Rurban, they have the CapEx plan of over 5,000 crores as well. What are your thoughts? I mean, how should one approach this stock from here? These numbers, one quarter data point that you have, but from a long-term standpoint, how should you look at Nestle?
Yeah, so see, Nestle for the last actually 2 quarters has been reporting good set of numbers. So the way to look at Nestle is that what do I own in FMCG as a sector as a whole, right? So if I want to have exposure to FMCG sector, what would be the likely candidates? In that scenario, Nestle, from its overall product profile and the category which it operates and the consistent growth rate, I would say that it fits quite well. challenge only continues to remain is the elevated valuations. But overall, I would say that Nestle will continue to grow ahead of the market. So from that scenario, having an allocation in Nestle makes a lot of sense.
All right. My sense is that the other expenses this time around were higher than what the street was anticipating, because I look at them and it's around 1,020 crores. This compares with the sale of net revenues of 4,800 crores. So that's about 21.2%. So do you think some of those raw material issues that the company faced earlier and, some savings out there have been reinvested into, increasing their market share and marketing spends? Because as a percentage of sales, other expenses have increased. Would you have any thoughts on this?
Yeah, it's very much possible, right? So because considering the kind of revenue growth that we are seeing and let's say that probably some bit of price hikes that they would have taken. So the spends on marketing and other expenses could have increased also, right? So that's something which is very, very likely. So as I was saying, overall margins look slightly lower to me. I would say that EBITDA margin profile looks slightly lower. But other than that, I would say that the company is delivering better than expectations.
Right, quarter on quarter, we have seen a bit of a slip in gross margins as well. Gross margins have come in at 53.5%. This compares with the same time last quarter at 54.5%, and the same time last year at 55.4%. So there has been a rough 200 basis points dip in their gross margins, which is why maybe the stock has come off highs a little bit. Important to watch out for demand as well going forward, because 21% revenue growth, Nigel, is the best that the company's posted in the last 10 years.
Wow.
And if you excuse, of course, for the Maggi crisis, the low base that happened and thereafter there was a big jump, because the management says that 21% quarterly growth is the highest that they've seen in the last 10 years.
Well, and Mangalam, I think the stock in this month itself is up 5%.
Yeah.
So maybe part of that good news for an already expensive stock could be in the price. It's outperformed the Nifty, particularly in this month. If you pull up a 1-month chart of Nestle as well as the Nifty, you'll get that picture up for you on the screen. So we've heard what Naveen had to say. Let's get in Abneesh Agarwal of Prabhudas Lilladher, who joins us on the show. Hi, Abneesh. Thanks so much for joining in. What do you make of these numbers? Prima facie, the first numbers that flashed look like a beat. And Mangalam says as well, the read-through is positive. Your view on the stock?
Yes, your top-line growth has been, I think, if you exclude some, you can say, COVID-based quarters or in the past, I think the top-line growth is really encouraging. The gross margins, as expected, they are, I would say, under some sort of a pressure. So I think the key here is that some of the raw materials for the company like milk, they continue to move up, so the pricing will remain with them. And I think going forward also, I think the margins is something at the gross level which one shouldn't expect that they will improve. But yes, if they can maintain some sort of a top-line momentum, and one actually needs to look at what kind of volume growth is there. Because Nestle, maybe excluding these recent 1 or 2 quarters, has been growing volume at least by, say, your mid-single digit or close to 8, 9, 10%. So I think overall the numbers seem to be quite positive, but yes, the valuations have been expensive. And given the fact that the company is going for a massive, you can say, expansion plans, so I think the stock will give you can say, moderate returns from here.
All right, moderate returns coming in from Nestle is what the expectations from PL are. Thanks a lot, gentlemen, for joining in and giving us your views on the Nestle, results so far. In case you've just tuned in, the Nestle revenues for the company have been much higher than street expectations, over 4,800 crores, 21% growth in their overall revenue this time around. And the net profit too has beat street expectations. The EBITDA, while on a margin front, has been slightly below. At an absolute level, it has been above street expectations as well. 737 crores is the net profit that Nestle has posted. 4,800 crores on the revenue, a little over 1,000 crores, a little under 1,100 crores is what the company's posted as an EBITDA. Management commentary strong, though the stock off highs for a couple of factors. One, maybe the street does not like the margins. Secondly, they do not like the valuations at which the stock trades. And thirdly, we had already seen a big move in the stock ahead of numbers. Take a short break, come back, get you more on the markets after this short break.